Welcome back. And I am very, very pleased and excited to introduce Mark Hurd, who I'm sure you all have seen before, Chairman, CEO, and President. Are you President too?
We're on a cost cutting, so I do a lot of jobs. Yeah.
Of a little company called Hewlett-Packard, largest tech company in the world, I read in the material.
That's what I've been told.
We're going to talk about a lot of things as quickly as we can. Welcome, Mark. Glad to have you with us. We're going to start with the numbers that you were talking about yesterday, just to get that out of the way, and then we'll move on to some bigger issues.
Okay.
And I want to
Although those are pretty big.
Those are pretty big.
Those are big issues. Yeah,
those are big
numbers yesterday.
Yeah, they are. Which is exactly what I was. I think of you as a numbers guy. I think most of the world sees you that way. You've got extensive operating experience. It was what HP probably most needed to have when you came in 2005, and it is probably so far the largest contribution you've made to the company. Is just having a personal view of what those numbers ought to be. I won't ask you that question now, but obviously you've got ratios in mind and things which were not being met, and that's done a magnificent job of bringing HP back from a very unfortunate time to, I think, probably the peak time maybe in the company's history. So I'll just say congratulations on a job well done before you get started here. And I'm not kissing your, what.
Well, let me tell you, the minute you start going that path, you got to retire, right? So,
all right, we won't go there.
We can do better than we're doing, Mark.
Yeah, but you've done a great job on the operating side. So congratulations on that. Here are the numbers. You can tell us, we saw them yesterday for Q2, isn't it?
It was our fiscal Q2.
Which is a funny,
Yeah, Mrs. Packard did not like the fact in 1947 that the year ended around Christmas.
Yeah.
So she informed Dave that
One
didn't
more
work,
month.
and Dave said, fine, we'll end the year in October.
Yeah, okay.
That's how it got started.
All right. Needed to know that.
That is a true story. These guys did a lot of amazing stuff, but that ranks up with...
Part of inheriting the HP way was inheriting this new fiscal year. So I guess gross revenues down 3%, corrected with currencies up 3%, and net down 17%.
Gap.
Because
that includes the restructuring of EDS.
Yep.
Probably flattish when you looked at it.
Okay.
Because Gap, again, we put all the restructuring of EDS from a year ago. So think of profits flattish.
Yeah. You and I are discussing this, take this where you want to, but a lot of guys on the call, a lot of guys out in the media were looking for a kind of a confirmation of what they were seeing from Chambers and other guys, Intel and so forth, saying they had already seen the end of the dark tunnel and there was a light there. And I think you made some comments yesterday. Anything you want to say about? I think your comments were basically flat. That we're still.
My point to him was we predict more of the same.
Yeah.
For the rest of the year.
Okay.
And I think people were hoping for.
Yeah.
Some big proclamation of improvement, and we just didn't go there.
Yeah.
We think more of the same for the rest of the year. We gained a lot of share in the first 2 quarters, which concerns me a bit because we haven't been pricing to do that. So, but overall, I thought it was steady as she goes. We made our numbers. Big cash flow, $5 billion in the quarter.
Record
cash flow for the company.
Yeah.
So I think overall good.
The currency bit I'm curious about. So just tell me about that briefly.
Euro's weaker.
Yep.
So a stronger dollar.
Yep.
Gives you lower revenues.
Yep.
That's simple. We do $60 billion in Europe, so it affects us.
Yeah. Okay.
You got to look at it local currency, though, Mark.
I know. There's this kind of dynamic going on between the overall global economy and what it's doing and the market swaps you're talking about.
Is it going to bother you, Mark, if I stand and walk a little bit as I talk?
No, you can walk.
Good. I have a hard time sitting these days.
That's all right. Should I walk with you, or?
It's up to you. Let me tell you about currency, though, just so you get it.
Yeah.
We have $60 billion of revenue in Europe.
Yep.
Probably $30 billion in Asia.
Yep.
So for us, as currency gets stronger, the dollar, it lowers our revenue. And it actually affects pricing to some degree in local markets at the same time as you do it. So we try to look at things on a local currency basis. We gained 2 points a share in PCs. First time in our history that we lead in Asia, lead in Europe, and lead in the U.S. at the same time, and lead globally.
Yeah.
We gained a point in servers, which we gained 4 points in Q1. And as I told you offline, it concerns me because we're really not pricing to gain that kind of share. And I think the market was hoping that, you know, with those kind of share gains, you'd see better performance on the absolute dollar.
Yeah, okay, I understand that. Well, and as I said to you, I think in bad times, that's when the largest share exchanges
It's
occur.
good long-term, Mark, so I
Yeah,
agree with you.
yeah,
But when you deal
yeah.
with investors, you're dealing with people
Yeah.
with a short, you know,
These are
time
different.
frame.
These are different kinds of guys.
Well, I know it's a friendlier audience.
Not just friendly. They're probably smarter in the sense of long-term planning.
I will not comment.
So,
but you know, in the end, right, when you're looking at short-term and you have 20% declines,
Yeah.
which is what you've seen from all tech companies on the infrastructure side, and then we gain share,
Yeah.
it doesn't feel good. The services side of the business just blew it out. Our acquisition of EDS has been
That's been huge.
Been superb for us.
99% up in revenues, right? Is that
100%
right?
growth.
Yeah,
We improved our, you know, EDS was making 4 or 5% operating profit. Our combined services business is now making over 13.
Well, I picture a guy like you taking a look at EDS, and it would take how many seconds, right?
Big
to go-
opportunity.
Let's see, the head count is what, and what are the revenues, and exactly how do we?
We bought EDS at 24 billion.
Yeah.
They had 135,000 people.
Yeah.
We thought they were the best service delivery company on the
Yeah.
planet Earth.
Right.
High cost structure, weak go to market.
Yes.
So weak go to market, high cost structure, fantastic service delivery.
Yep.
Since we bought them, customer satisfaction up,
Let a bunch of guys go,
let a bunch of guys go.
which had to happen to
Had
get
happen
to the numbers.
cost structure right
yeah,
because that
yeah.
affects your ability to grow.
Yep.
And I'm a big believer that cost and growth.
And they were out of whack. They were way off the charts, weren't they?
They were tough.
Yeah, okay.
But good company.
Yep.
And they've been a tremendous asset for us. And I think that, you know, think about us now having services producing in the quarter half of Hewlett-Packard's profits.
Yeah.
Came from services.
That didn't take long.
Didn't take long.
That
It
was
good,
amazing.
good
That was
opportunity for us.
amazing. It's a nice work.
Big crown jewel for us. So think of us now having a printing crown jewel, sort of a server crown jewel, a services crown jewel. We love our software business, and you know our position in PCs. So we're trying very hard to take leadership positions in those key markets.
Yeah. So you've already brought up my next two questions. One is I want to go back for a minute to currencies because you say this thing about local, twice you said local currencies.
Yeah.
One of the trends we're talking about this week is currency wars. I think that there are an increased number of global leaders who are going to use currencies as a weapon going forward. They see guys like you and what happens to the net trade balance, and they realize that they can do more for their companies as a country by messing with the currencies than they can do other ways. So you see a lot of manipulation going on, and more to come, I think. As a matter of fact, we'll talk about this, but China, you've been watching China lately, all the deals are denominated in their own currency.
Yes.
So
Yes.
how do you play that game? When you talk to me about...
It's a dicey game.
Yeah, playing gap rules.
Well, we always play gap rules, Mark.
I know. So, so how do you,
Remember this about non-GAAP.
Currencies-
I want to say this one thing. Non-GAAP is a process where you give more numbers, not less.
Yes.
So non-GAAP is good, more transparency. But you have to report in GAAP. Currency is a very
Mexican peso goes 25 to 30%, 6 months.
Canadian dollar. You
Yeah.
can go look at the Canadian
Euro
dollar.
goes-
Look at the euro. One
Yeah.
month, mid-150s to 120s. Look at the pound.
Can you guys
$2.
hedge this?
We can hedge anything we want to.
Do you?
We do partially, but you've got to remember you're hedging when you get into a dicey economic environment. If you overhedge, meaning I usually do 10 billion in pounds for a year. If I were to hedge 10 billion and then I'd get 8 billion, I'll pay for that 2 billion a hedge and it'll cost me a ton of money.
Yeah.
So you got to predict your revenues
Yeah.
very well,
Yeah.
and then you have to call the spot market. And the way accounting works in big companies is you get a one-day spot market trade. So if the pound is trading at 138 on Thursday, and that's when you close it, it's 138, whereas Friday it could be 142.
Yeah. So it's
It's a
very
dicey,
tough.
it's a dicey game.
And I think more of that to come rather than less.
You know, we try to be careful that we don't overhedge
Yeah.
and make hedging a competency of the company or
Right.
a required
Do you
competency
feel
of the company.
pressure as these things start to mount?
The industry understands it relatively well. So again, we get paid in euros.
Yeah.
We get paid in pounds.
yeah.
We don't get paid in dollars in the UK.
Yeah.
So we tend to look at markets based on local currency. We'd only hedge if we saw dramatic shifts And typically, we saw those shifts going negative, and we liked the current spot price, and we could run our business that way. Remember, for us, it works two ways, because we also get lower costs.
Yeah.
If we hedge, we have to hedge costs and revenue simultaneously.
Right.
So you've also got to denominate how much of your cost is in that local currency
right.
versus dollars, and how does that interplay?
That's right, and where your production is, right? Yeah. Okay, the other question is, in numbers, looking at storage and servers, we kind of have these two things going on, where globally, economy's down, you expect to see some changes in numbers anyway, everyone's doing the same kind of bump down. You're probably less than a lot of these guys, but looking at the absolute numbers, storage and servers were really not, well, where I thought they were going to be. There were lower numbers than I thought. Any reasons for that?
Well, we gained share in both in the quarter. We gained less share than we did in PCs. In Q1, we gained 4 points in servers. We gained a point this quarter in servers. So
did you think you were going to get 3 points?
No, we didn't price to gain share. We sort of priced to, again, remember, we met our revenue. Our revenue was sort of right on the top line. So it behaves sort of as we like. The negative feeling you hear from me, Mark, and it's not negative, it's just that I would have thought our share would have been more neutral, and we would have made the numbers.
Yeah.
And that would have told me the market was better, meaning in Q3 there was more market to go pop and go get.
But the absolute numbers in those two categories are probably less than what you wanted.
I always want more.
There you go. I knew I'd get that somehow.
Yeah.
Software is a big deal.
Big deal.
Big deal for 18 reasons. So way before you ever came to the company, in my humble opinion, that was kind of the weak link at HP. Brilliant hardware engineering, brilliant products, well-tested, reliable, up and down the, but then you'd get a tape drive and the software would be by a third party. It didn't look right, didn't work right. You have to try it 3 times and ask for help. This is a true experience from years ago. So it felt to me that HP had that missing piece in a sense. And I know that you've had software as part of kind of the software and services view, right?
Right.
It's kind of shared by Sam Palmisano and some other guys.
Who?
IBM. So what about software? I think that you guys are kind of halfway done. Is that fair? It seems like you've done a lot. You've bought some companies. You've focused pretty intensely on software, but it feels to me like there's more to do.
I'll try to be concise on it, but it's a big subject for us. Software plays many roles in the company. First of all, over 60% of our overall R&D now is in software, not hardware. Software as a business unit is important to us. You saw it made 18% profit in the quarter. It's up to more than a $3 billion business for us. So in and of itself, it's a big business. So a software business, and that's the business of management tools, server management, storage management, data center management. When you go to most companies, ask them what tool set they've got, they'll list, even if they can list, how many companies they buy tools from. We want to roll all that up and be the provider of choice. We've got 18% market share in that market, and we're the leader. So by definition, it's screwed up.
So managing data centers.
Managing data centers, well, there's no market historically where a mature market where the leader has 18%. Right? At some point, leaders typically have 40, 45, our position in the server business or the printer business or something like this. The 18% tells you it's a fragmented market with a lot of growth ahead of it, and we think a big customer opportunity for us. But that's the way we think of it, Mark, as a business. That said, when you think of EDS, I had a long-standing feeling in the services business that any standalone services company, a company that did not have a technology arm, was long run out of business because the key to a services business wasn't arbitraging labor to some other country. It was automating things. And automating things did 2 things. It didn't arbitrage a cost, it actually eliminates the cost. And it actually raises service levels at the same time. So the application of the software business to the services business is just as strategic to us as the software business itself.
Right. And in fact, that's almost the story of software at HP, isn't it? It's not like Microsoft, just where you put the box out front. It's really like, here's your stuff, and it all works flawlessly, and it's all automatic, and by the way, there's a lot of software in there.
Yeah, and I think, Mark, you're going to see more of this coming. I mean, if you look at the server market, you look at the storage market, you look at the networking market, They're all the same sort of size and revenue, very different margin pools. The margins in servers are much less than storage in the industry, and much less than in networking. But we think PCs, servers, storage devices, networking devices are all going to source the exact same components. They're going to look very similar under x86 wrappers, surrounded by management software, integrated with services. And that's HP. I mean, that's what we're building, which is this incredibly scaled supply chain that we think has an opportunity to grow, leveraging industry standard components. Today, as you know, 80% of what's in a server is in a PC. 80% of what's in a blade is in a server. Storage devices still less than 40% of standard components. Networking devices, less. Opportunity for us to standardize all of those infrastructure pieces, and then you'll start seeing them combined. We released a product last week called Matrix. It's a combination server, storage device, networking device. And you're going to see more and more of those hybrids wrapped around a software wrapper with a services capability.
Well, it's just staying ahead of Moore's Law, isn't it?
That's exactly right.
Yeah, I mean, every year we have conversations that get smaller and smaller and
My
smaller.
point, it's just no longer about PCs. It's no longer just about servers. It's going to be about all the infrastructure pieces and the leverage across them.
So I'll ask you a competitive question. You saw the Dell offering last week with the VIA processor in it, I think. So they're kind of trying to declare a new category with low power consumption and lots of, channels per server and lots of servers per cubic foot and so forth.
I see.
Did you see that thing?
I did.
Okay.
I heard about it.
Any comments?
I mean, listen, I think there's a lot of folks out there.
Is that a new category?
It doesn't feel like it, does it?
No.
So it feels like just a new SKU.
All right. You guys put out something 2 or 3 days ago. Was a new web press printing operation near here with inkjets. Are you familiar with that?
Yes,
Okay.
I am, Mark.
And I mean, I know you are, but I got to say it.
Thank you for asking me.
It looked pretty amazing. And 30-inch wide, could go 40, could go whatever. And it's super fast, all inkjet. What struck me about that wasn't what I just said, but the fact that it looks to me as though the entire thing is vertically integrated by HP.
Right.
So all the parts, everything.
That's right. That's exactly right.
That's true, isn't it? Is that a trend?
So think of the printing world. Let me take you up a level. Right. 80% of the world's printing is analog today. Depends on which number you pick, but it's a big number. Less than 20 is digital. So when you think of us today, think of us as having 1.6 market share of all the printed pages in the world, and most of those pages are analog. And what's happening is with WebPress, digital, and that's like, to give you an example, we would look at this as probably 3 printed pages. The thing here, this label, this top, and they're all printed on web presses. And they're typically what we would call graphic plays. And what we're doing is trying to get the ink capability in these digital presses to beat the performance of what you would see in analog. And you're seeing digital do more and more stuff that can replace analog. And that's what you're seeing with the web presses. And they're fully integrated with HP technology through and through.
That's the part I'm talking about. So that trend
is going to continue.
It's
big.
That's what I'm asking.
It's a big deal.
That is a big deal.
The printing market is going to go through massive change, and it isn't just this demographic of whether kids are printing a lot. The fact of the matter is there's more data. Let me see if I give this data to you right. You probably know this. More data created in the next 4 years, history of the planet. 3% of the world's data is digital, doubling every 18 months. That digitization is a huge opportunity from a printing perspective. And we've got to capture those pages. And so for us, it's not just about the consumer printer at the home. It's about the ecosystem of printing that goes on around the planet. And that's what those web presses
And is that vertical integration also to carry on? It sounds to me, from what you're saying, that the the integration might be elsewhere. So this talking about like PCs and servers and storage all in one thing, that's vertically integrated too.
It's leverage everywhere. And that's what's going on in the industry. How do I get leverage? How do I be able to create economies of scale? And that's what you're seeing across the intellectual property ecosystem.
But may I suggest we're also seeing a different trend where you kind of outsource everything to India, not you, but others, to Taiwan, to OEM, ODM, you know, you do this part, somebody's going to do something else in Malaysia.
I'm not a huge supporter of that strategy. I think that we have a big presence in India, like most companies do. We do a lot of manufacturing in China, but most of our manufacturing is not outsourcing. Most of ours is to build where the customer is.
Yeah.
Our biggest cost manufacturing-wise is logistics.
Yeah.
So outsourcing, our labor cost in a manufacturing facility, Mark, is probably 8%.
So
even if I have it, my logistics is 35.
Yep,
I don't win anything.
So we're right back to the currency conversation. So you build locally when you can.
I can, yeah.
Yeah.
Got to, because I got to be close to the customer.
Yeah, okay.
Got to be close to the customer. So labor arbitrage, when I go to DC and they tell me, hey, you built a plant in Hungary. Yeah, because I'm trying to sell things to people in Hungary.
Yeah.
I'm not building it in Hungary so that I can ship it back to Chicago.
Right.
So we try to get the optimization of the right labor pool, but frankly, the right logistics hubs with the right skill and capability to meet the local demand.
That's more important.
It's critical.
Yeah.
It's critical to us.
Okay, is there a hole, when you look at the portfolio of products right now, I mean, things look pretty good, but is there a hole there? Do you see a place, I'm sure you'll telegraph this to all of your competitors, but do you see a place where you kind of publicly want to go, where you're not there yet? Or
No, I think the market, if you looked at where we think it's headed, we think digitization and printing is critical. So for us, in the printing space, which you went to, the reason we build retail photo kiosks, which is where we want to scale, the reason we own Snapfish, which is pictures in the sky, is because we want the consumer to be able to use whatever mechanism they want to go deal with how they print. We just want HP infrastructure at every turn. So we want to grow in the ecosystem with the retail photo kiosk at the retailer, on the web, and at home. So in printing, we've got most of those are organic capabilities.
I want to go beyond printing.
Yeah, I'm sure
you guys own printing, so it's like, that's okay.
Well,
what I'm suggesting is, so I'll just throw one at you.
Okay.
Why shouldn't the world's most important digital imaging company make television sets, or something in the future that won't be called television sets anymore, but make those screens that we're all going to be using in every room to do this stuff that we do?
So there's been a long-standing feeling that that's a natural extension
Right.
of the PC business. I think, again, it only makes sense if it's got leverage.
Yeah.
Across,
differentiate if you can,
exactly.
yeah.
You've got to be able to leverage the core
Yeah.
capability of the company, and then you have to be able to differentiate
do
on
that?
top of that. You know, I think the problem, particularly with TVs, has been it has not been industry standard parts. The attempts to bring industry standard parts to the TV business have been met with, less than exciting answers. Now, I think there's a better opportunity as you see content changing and the needs of the consumer changing. I want to be more interactive with that
As
capability.
IPTV comes in.
Exactly, you get a bigger opportunity, and you're beginning to see some of that. Sure, I mean, not all of them. Well, I've got 2 kids. One of my daughters watches TV on her PC, and that's how she interacts, and that's how she deals with content.
Yeah.
That is a new emerging market, but it's taking time. It'll take time for this demographic to scale a bit to make that a reality.
But it seems like a slam dunk if you did have a way of differentiating.
It is a big opportunity as you get people that want to do more than just sit and stare at a screen and watch content fed to them.
Exactly. Plus, as you know, you and me and all these guys are constantly moving around. Wherever we go, it's kind of the same. I just want to go to the office, your office, my office, see the stuff on the screen. I want to go back to see the same thing in the same format on the other screen, see it on this screen, right?
Yeah.
It's everything
Mark,
everywhere.
I'll tell you this, in all of our consumer studies,
Yep.
the one thing that always comes clear is there is no ubiquitous device, form factor that everybody rallies around.
Right.
Some people are willing to travel with a little
But they
screen.
want everything everywhere.
They do. And they want to be able to look at content the way they want to look at it, when they want to look at it, how they want to look at it. So that's why we have to be able to deliver a series of
All
capabilities.
right, so when we have you back here 5 years, we'll talk about that.
Glad to do it.
And we'll talk about that currency stuff again in 5 years.
Currency stuff is complicated.
One of the big questions for me, particularly regarding you, when I watch your whole career, the arc of your career and your expertise, and this is a question you've heard many times before. Let's just stipulate the most brilliant operations guy alive today. Okay, done. Now, the question to me is, coming into HP, right? A history of HP labs and all heavy-duty R&D spending and lots of stuff out there, kind of pure science, and a lot of economic pressure to cut that back. You've done some of that already. Focus it on products, get the product R&D thing locked in more tightly. But all of this is behind a larger question, which is when Mark gets to what I call the third chapter, and I think I've talked to you about this too. So the third chapter is strategy. And when Lou Gerstner came into IBM, they asked him the strategy question. He said, "The hell is strategy?" But then he had one. He immediately had one, so it was like, go away. But he had the most brilliant strategy for IBM. Right. So when you think about strategy for HP, can you do the elevator speech for me? What's the HP strategy?
Yeah, listen, I think at the end of the day, to your point, going back to where you started, CEOs work on three things: strategy, operations, and people. Right. If you get those three things right, there's a lot of other places you can spend your time, but good things typically happen to you if you get those right. Yeah. Our strategy has been pretty simple. We wanted to go be the leading IT company in the world. We were $79 billion in 2004. We're $120 billion today.
Well, that's the goal, not the strategy.
Well, but for us, scale was important.
Yes.
Because at the same time for us, we've been trying to make sure we like the infrastructure business. Yeah. We think the infrastructure business is a big deal. We want to be the leading infrastructure provider on the planet. Right. We want to surround that in software capabilities, deliver that through a series of services. And at the end of the day, if you think of it this simply, with all that, I won't go through the digitization and the content again, but our view is all of that content, all of it has to be processed. It has to be stored. It has to be shared. It has to be visualized. We love it when it's printed. Yep. It has to be managed from a nodal perspective and delivered through services, both consumer and enterprise. That's HP. Yeah. That's what we're building.
All right. We have 3 minutes and 6 seconds. I'm sure there are lots of questions, so sure. Let's open this up, lights up, and if there are questions, raise your hand, and please identify who you are, what company you're from, and then ask your question. We have one right here. And you can stand up because we're standing up.
Yeah, that's right. I like that. Ty Carlson with Microsoft. Could you comment a bit? We're very interested in memristor and things with silicon photonics simply because we see many core and bandwidth issues being a huge issue coming up. And you've got the fourth circuit element in the memristor. Can you comment and when we might see it and things of that order?
Probably a better question when Russ is up peaking. Russ Daniels. Russ, do you want to stand maybe? Where's Russ? Russ is over there. And he can tell you more about memristor than I can. I probably wouldn't do justice to it in 2 minutes. But I will tell you, we are investing in it. We've got something we're going to continue. We think it's a cool thing. And we're trying right now to do the usual thing. This came out of labs. It was purely a labs R event.
That was like pure science, wasn't it?
Pure R. And we spend a bunch of money in R that, to Mark's point, a numerate person wants to dive into. You sure I'm getting a return on the R? So we're right now looking for partnerships to productize memristor as we go. So better question probably for there. Thanks.
What kind of partnerships?
Depends. We're open. We're open. We're trying right now. The most applicable place for the technology sits in enterprise servers and storage, and that's probably the place you'll see the first productization. But we'd be open to taking it to market. We're not unique to HP on it. We'd be glad to license the product and take it to market as a raw technology.
Cool. Thanks, Ty. Another question? Name?
My name is Balan Naim from Liberty Global. Cisco has decided to get into the server market. Lots of folks are in that market. That market's pretty much getting very commoditized. Companies that try to differentiate their product like Sun, and you know the story there.
Sure.
How do you regain pricing power in a commodity market like that?
Well, I don't know that you get pricing power. I think to your point, when you look at that market is a lot about scale. It's a lot about standardization. It's a lot about leverage in the market on the part of the people that you're going to that supply, and then trying to create some differentiation in terms of technical capability. So I don't think you're going to see 5 years from now a server market the way we talk about it right now. I think you're going to be talking about a broader-based infrastructure market. And I think you're going to talk about, when you look at a server, is that a server or is that a storage array? And they're going to look a lot alike. And when you look at a networking capability and say, I want to virtualize some of that networking capability, we got a product called Virtual Connect that actually virtualizes your network connections as you do it. You're going to see all that capability merging into an infrastructure capability. And I mentioned this Matrix product. I think this is the first of many to come where you're going to see an integration of those capabilities. So the server market, the way you described it, is sort of, I'd say, in the rearview mirror. The server market's about $57 billion. About $30 billion of it today is now what you might call industry standard which is, industry standard servers, blades, et cetera, and I think that trend will continue. I think you're going to see what happened to the storage market, what happened to the server market. And I think you're going to have what happened in the networking market, what happens to the storage market. And you're going to see those markets leverage on standard parts, scale, differentiation sitting on top of that infrastructure.
Great. We can squeeze one more question in if there is one.
Yeah. Hi, Mark Binger with Lux Research. We heard this morning from some people that were saying there's a lot of resistance to innovation. There's a lot of risk avoidance, basically, in software and some conventional IT stuff. And you just mentioned memristors is something that's kind of far off in the future. Are the things that are in between the day-to-day technology that we're fairly used to and those pretty far-off things like printable displays or power, energy storage, or things like that, do you think HP is going to play a role in either developing for its own use or providing as other services?
Yeah. So first, I think there's always the battle you describe between what is R. When you go into our labs, our D guys, the D of R&D, would love labs to be a supplemental D. And it's always an argument to say, stay in the R. Because I don't necessarily want you to become a secondary development organization and supplement the D. So there's always that battle described. And listen, we have guys in our labs inventing stuff. A guy showed me a wireless mouse. Thought it was fantastic. I could sit from here and change the screen way down here. As I asked the guy, I don't know what I do with this thing, but it's a cool technical trick. But again, for us, we have to be able to translate those technical tricks into something that's commercializable. And I think you'll see continued movement in the data center. The data center, as we describe it today, has to evolve in so many different dimensions, right? Today, we're sticking so much stuff in small places now, kicking off so much heat, kicking off so much power. We run our data centers at HP about 5 to 6 degrees hotter than the average data center. The way we do that is all through R. We've invented a capability to cool devices without cooling the room. That's allowed us to raise the temperature. We've been able to throttle down a blade. Depending on how much you're using, we can now throttle it to 0 or throttle it up to max power, and we can now do it remotely. I can go through hundreds of things that we've done that have come out of really a labs capability, have been designed to maximize the data center. You're going to see the release of some PCs, some supplemental to our TouchSmart capabilities. We showed a little bit of this at Interop yesterday, where you can now actually do a conference on your PC and use the screen as a writing board. And you can write your name, and it'll show back up and reflect as your name the way you wrote it to the person you're in video conference with. You'll see a capability that'll look like a video conferencing capability you've ever seen if you compare it side by side with a Skype or something like that, and the ability to do what I described. So all kinds of stuff coming out, and we are sticking to our innovation commitment. We're not cutting any consequential. We're always adapting and saying this doesn't look like it's good, and we'll get rid of that. Focus more on this, but we're very committed to driving into our core capabilities.
All right, that's our time.
All right, thank you.
Thank you.
Thanks, Mark. Thanks.